There is one number in Rwanda that quietly affects every loan you take, every franc you save, and every price you pay at the market. Most people have never heard of it. It is called the central bank rate. Think of it like a water tap. The National Bank of Rwanda, BNR, controls a giant tap that determines how much money flows through the entire economy. When BNR turns the tap open by lowering the rate, money flows more freely. Banks can borrow cheaply from BNR, so they lend to you at lower rates. Businesses borrow more, people spend more, the economy heats up. When BNR tightens the tap by raising the rate, money flows slower, borrowing costs go up, people spend less, the economy cools down, and that is exactly what happened 2 weeks ago. Here is how it works in practice. BNR sets the central bank rate, right now 7.25%. This is the rate at which commercial banks can borrow money from BNR. When that rate goes up, it costs banks more to get money. So what do banks do? They pass that cost on to you. The interbank rate, what banks charge each other, is already at 6.87%, tracking close to the CBR. The average lending rate for customers, 15.72%, and that is likely going higher. If you have a variable rate loan, your monthly payment increases. If you are a business owner borrowing to buy stock, your costs go up, and those costs get passed into the prices you and I pay. But there is also a flip side. Higher rates make saving more attractive. Banks need deposits, so they eventually offer better returns to attract your money. That is the trade-off BNR is making. Let me show you the journey. In early 2024, the central bank rate was 5.0%. The economy was growing, inflation was manageable, money was flowing. In August 2024, BNR raised it to 6.5%. Inflation was starting to creep up. First signal that the tap needed tightening. By November 2025, another raise to 6.75%. Core inflation was climbing. Electricity tariffs went up. Fuel costs were rising. And then, February 19, 2026, just 2 weeks ago, BNR raised it again to 7.25%, the biggest single move in this cycle. Why? Because inflation hit 8.9%, breaking through BNR's target ceiling of 8% for the first time. So what does 7.25% mean for your life? If you borrow, loans get more expensive. The average lending rate is already 15.72% and will likely rise. If you are planning to take a loan, factor in higher repayments. If you already have a variable rate loan, talk to your bank now about what changes to expect. If you save, this is potentially good news. When BNR raises rates, banks eventually compete harder for your deposits. The average deposit rate right now is 8.98%. With the CBR now at 7.25 and possibly going higher, deposit rates could cross above inflation, meaning your savings would actually grow in real terms. But the key word is eventually. Rate changes take 6 to 12 months to fully filter through the system. So be patient, but be proactive. Shop around for the best rates now. If you remember one thing from this video, let it be this. The central bank rate is the price of money in Rwanda. When BNR raises it, borrowing costs more and saving should pay more. It is the most powerful tool the central bank has to keep the economy stable. To understand why BNR raised rates, watch our full breakdown of the February decision right here. And for the complete picture on inflation, what it is and how it works, watch the video on inflation. Subscribe to Africa Money for weekly updates on the numbers that matter. Thanks for watching.